Yeah, morning traders. We'll see a huge week ahead. Everyone's been focused on the plethora of tier one event risk this week, whether you're looking at corporate earnings in the US specifically, where 42% of the S&P market cap will be reporting. We'll be looking at this plethora of central bankers or tier one economic data to guide through. Yeah, there is really something in there for everyone to sort of manage in terms of that risk. But today seems like a bit of a calm before the storm. Generally speaking, though, if you look at the net change now, yeah, there has been a sort of an element of risk taking that's been taking place. I guess on one hand, you are looking at what's happened in geopolitics. I think somewhat infused by the tape that we've been seeing in Brent. We saw the front month open at 84.80, and it's been a steady bleed into where we are at the moment, around sort of $82. So that reversal lower has probably taken a bit of risk back into the market, but it's also weighed on the energy sector in the S&P as well. I think generally speaking, if you have a look at the tape in US Treasuries through the trading session, if you have a look at the move that we've been seeing in fives, you can see good buying playing through, sort of a steady sort of grind lower. And then we saw the Treasury financing estimates, the borrowing estimates that came through. And they've taken them down from $816 billion to $760 billion for Q1, and for Q2, $202 billion. Now, these numbers are lower than what the market was looking for. So the financing needs, the requirements for the Treasury Department, lower than what the street's looking for. Now, we've got the composition and the breakdown of that borrowing, whether it's bills, bonds, skew there. And where they're going to place those coupon issuances, in different auctions. But we'll get that on Wednesday. But certainly these funding tasks far lower than what the market was looking for, and that has been bullish on bonds. We've seen yields move a little bit lower once we've got that situation playing through. Now that has also weighed on the US dollar. If we have a look at the net change on the US dollar, we're seeing some interesting moves, certainly in the Kiwi and the Australian dollar. But if we have a look at the Dixie, we sort of traded up to 103.82. Things are looking pretty good. But then there's been this reversal as yields have traded lower, and we're currently trading just shy of sort of 103.40 at the moment in that situation. Now, if you look at dollar yen, of course, a slave to what we've been seeing in the yields markets. We sort of opened or closed in the price session at 148.15. We're just trading, sort of the low 147s at the moment. So it's been a decent move down, through that 100-day moving average. And I think it's the Kiwi dollar which has been the sort of superstar on the day, backed also by the fact that we've seen the RBNZ chief economist, Mr. Conway, talking about the fact it's still some way to go till they receive the midpoint of their non-tradables gets to the sort of 2% target. But Kiwi dollar very much in focus. And actually, if you have a look at Euro Kiwi, I think that's been probably one of the star plays to be, in terms of being shorts at the moment. Got currently trading around 176.50. So I think that's got further downside playing through. That move down in yield, the move lower in the US dollar has been good for stocks. We're seeing that ripping at the moment. So opening up 70 basis points in the S&P cash. We're currently trading at 49.27, up 0.7%. The Nasdaq's doing quite well. And of course, people are asking, can we get through to 5,000 at some stage very, very soon? I think that's an interesting one. Of course, in the session ahead, this is where you're going to get the catalyst. We are going to be watching for earnings from Pfizer, UPS and Poulter Homes. They'll be coming out pre-market. But the aftermarket in the session ahead, in tomorrow's session, should we say, for the US, we get Microsoft, we've got AMD, and we've got Alphabet coming through. Now, of course, Microsoft has the biggest market cap in the world in terms of those stocks. And the implied volatility and the implied move from options pricing is 4.3%. So the stock at the moment is doing very nicely, obviously trading around sort of 409 as I speak. The market is obviously very long Microsoft, as they are with a lot of these tech stocks. They're going to have to blow the lights out. They're going to have to come up with something pretty strong to keep this momentum going. But at the moment, equities are ripping on what we've been seeing, this lower funding task from the Treasury, the bullish moves we've been seeing, and yields trading lower. The question is, can we get to 5,000? Of course, as we see this week with the earnings, it really is very, very hard to be short these names in any kind of capacity. The market does not want to be left behind if we get good earnings. So a big session ahead. We've also got consumer confidence numbers and jolts coming through in the US. To look at the opening calls at the moment, it does look like we're going to see a bit of a mixed picture. We're calling the ASX up about 0.5%. We're expecting a small gains in the Nikkei, but we're actually expecting Hang Seng to open about 1.5% lower at this stage. Interesting session ahead.